Check. Yeah, let's look at it.
And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story. Real talk about money, markets, life. Now, it's The Real Investment Show with Lance Roberts, presented by RIA Advisors.
And good morning and welcome to The Real Investment Show. It's, of course, a new year as we have gotten the first day of the trading out of the way. Of course, not a great day yesterday. Markets started out on the upside early in the morning. Looked like we were going to get kind of that first 5 days rally that we were hoping for. Market failed, closed lower yesterday. Now we're going to try again this morning. Futures pointing up here a little bit. So we'll see how it goes this morning. But of course, lots of concern here. Santa Claus did not visit Broad and Wall, right? And that's the big story here, because again, when Santa Claus fails to visit Wall Street, well, typically the following year has not been great. Now, of course, we're also into the month of January, which is just full of axioms, right, that we go back through history about. So go the first 5 days of January, so goes the year. Well, this is day two. First day of the year wasn't great, but we're in day two now, so we'll see how this goes. So goes the month of January, so goes the year, right? So a lot of concern here about trying to get some traction underneath the markets here. If we can get the market to perform a little bit here over the next few days, few weeks, maybe they'll provide a little bit better outlook for the markets and get some people to allocate some capital back to stocks. Now, the good news here on a real short-term basis is that we haven't really done much over the last few weeks, and the last couple of weeks in particular. This whole Santa Claus rally, yes, we failed to go anywhere, but market didn't really do much. Just kind of really just set here at a fairly strong base right along this 3,800 level, just really kind of back and forth off that level. So been building this little base, this very consolidation range here over the course of the last couple of weeks of trading. That's kind of good news for a couple of reasons. One, we're setting higher lows. The last time that we kind of based like this at a low was back in October. Of course, that led to that rally in November. Difference was markets were much more oversold back then. So again, the rally that we got was a bit larger here. But the good news is that we are starting to look like we're trying to establish a higher low from that October low. So we had the lows in October, and the markets had this nice rally, pull back, trying to form this low. So that's a little bit bullish outlook here for stocks, at least in the short term. If we can form this higher low, that also kind of puts this potential here for a rally to rally back up here a bit. Now, unfortunately, a lot of resistance here. We've got several moving averages that are all converging right here at 3,900. Which is just above where the market's trading right now. So we may get a little bit of a rally here, but again, a lot of resistance to try to get through at the moment. Again, outlooks for this year still not great. Got to talk about the economy certainly going to be slowing down this year some more as the Fed continues to hike rates. This week we're going to get the minutes out for the last Federal Reserve meeting, so we'll kind of get a little bit more flavor about their outlook for hiking rates and where or if. And of course, we drift from one meeting to the next hoping for a pivot. That hasn't come yet, and there's no indication the Fed is going to pivot anytime soon. But again, the Fed's hiking rates, but more importantly, and this is Michael Liebowitz posted out an article on our website this morning. So if you go to our website, realinvestmentadvice.com, there's an article there talking about quantitative tightening, and it's also kind of the tag of our daily market commentary going out this morning as well at 7:30, so make sure you're subscribed for that at the website. The Fed is still tightening monetary policy, not just in terms of hiking rates, and this is potentially one of the mistakes that a lot of investors are going to make is looking for that first pivot for the Fed. And at some point this year, yes, the Fed is going to stop hiking rates. That's not a pivot, right? That's just them stopping hiking rates. Their plan is to hold those rates at a higher level. Of course, higher interest rates, slow economic growth, that's going to slow down earnings. Earnings have not corrected enough yet to adjust for a weaker economic outlook. Slower spending, slower consumption, all those excess savings that a lot of consumers had saved up in the bank following all those stimulus checks, that's fading off pretty quickly here as that kind of fiscal pig moves through the economic python, right? So there's a lot of impact here going into this year that is certainly going to be a challenge for markets. So, again, something to pay attention to, but most importantly, it's quantitative tightening. Right? The Fed is going to be tightening their balance sheet some more. They've gotten off to a slow start. They were supposed to be doing about $700 billion by now. They're roughly right around $500 billion. So that $95 billion a month in roll-off is going to pick up this year as we start getting into further this year, moving those assets off their books, reducing that balance sheet. That's less liquidity in the markets. So again, the thing that investors are hoping for, they're hoping for this pivot from the Fed. But again, when the Fed does pivot, when the Fed does start reducing rates and potentially reversing QT back to QE, that's not going to be the moment to buy stocks. That'll be because they broke something. So again, don't be too anxious about jumping into the markets just yet. Again, all the things that kind of weighed on the markets last year have not changed, right? Inflation is still running at fairly high levels. Yes, it's coming down, but still running at high levels. Interest rates are certainly elevated here. That's going to weigh on the consumer and the economy. Quantitative tightening is going to contract that liquidity that was flowing into the market. So all the things that supported the asset growth over the last couple of years, in particular, monetary stimulus from the government, none of that exists anymore. So again, hoping that we're going to get back into a rip-roaring bull market over the course of the next few months might be a little bit exuberant. So just be a little bit cautious here. Again, it doesn't mean that markets can't, start to go up, right? It doesn't mean that, we do certainly have some bullish kind of indications that are forming here in the markets. If we can establish these higher lows, if we can get the MACD to turn back onto a buy signal, markets are oversold short-term enough to have a decent rally here. 3,900, 4,000 on the S&P would not be surprising at all here in the next month or two. And again, fairly decent rally to trade, but be careful, saying, okay, well, now the bull market's back, the bear market's over. That may not be the case just yet. So again, kind of pay attention to this. A lot of headlines out right now that the market has never had 2 down years, in a row. It's actually happened before, 1973, 74, of course, 2001 and 2. You had 2 consecutive down years. We've actually had, bear markets that have lasted longer. It's more of a calendar quirk than anything else. Like the bear market started halfway through a particular year and the market started to decline, but didn't wipe out all the previous gains for the year. And then you had more of a decline next year. So again, a lot of this analysis you're going to see about the markets never, not having, sorry, I'll spit that out. A lot of this analysis you'll read about, 2 down years in the markets being a very rare thing. It does happen. A lot of times it's a calendar quirk, so just be careful with the headlines. Yes, within a given 12-month period, you may not have 2 down years in a row, but you've had declines that have certainly lasted longer than a year, multiple times. So again, just kind of pay attention to what's going on here. The risk of another down year certainly is there, depending on what's happening with the economy and the markets as we get into later this year. If we do get a recession, of course, that's going to be the bigger driver for earnings and markets and those type of things. So a lot of stuff to get into this morning, all getting caught up here after being on vacation for a week. So we might have a few little glitches this morning as we get back in the groove of things, but stick around, be right back after the break. We'll talk about, the markets, money, economics, more. It's all coming up this morning right here on the Real Investment Show. Don't go away.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Are you as worried about estate taxes as we are? Our first Lunch and Learn of the new year will focus on family limited partnerships. This valuable tool in the tax code could provide your estate with the safety and security you crave for your family. Join Richard Rosso, Danny Ratliff, and special guest Chris Masters, CPA with Doran Mayhew, Thursday, January 12th at noon, with the ins and outs of family limited partnerships for your estate and tax planning. Register now at realinvestmentadvice.com. realinvestmentadvice.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets. And unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Get started right now at the website, realinvestmentadvice.com, or simply call our toll-free number, 855-RIA-PLAN, or again, simply online at realinvestmentadvice.com.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement, realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
The Real Investment Show.
I told you you'd have a glitch. We're just trying to get back into the swing of things.
And we actually had a dress rehearsal yesterday, so
There you go.
you know.
Stuff happens, though. So I would be remiss if I didn't tell you about my ski trip this year.
Oh, yes.
Yes, because, I cannot go on a trip without having something happen, right? There's just, either my son, gets appendicitis, while we're there, broken collarbone, delayed airline flight, something. Something always happens, especially when we go to see my liberal cousin, Dwayne.
It's the luck of the Roberts.
It's the luck of the Roberts, and maybe it's just my liberal cousin, Dwayne. Maybe it's when we fly out to Utah to go see him that, it becomes an issue. So this year, we get up and we go to the airport. Everything's going smoothly, swimmingly well. We get there's nobody around. Everything's going well. We get into the airport, and of course, all the kids had come home from college, right? So we got all the kids with us, and so we're all going to the airport. Trip starting off very well. Of course, now we're worried about flight delays because of this whole Southwest Airlines thing going on.
Sure.
Now, we were flying United, but, worried about the weather and potential, delays. And so we get to the airport, our flight's on time, things are starting out really well. We get a text, or my son gets a text, actually, and it's a picture of his car. And the picture of the car is from the side where there's now a giant dent in the door of the car. The neighbor across the street had backed out of the driveway, and he was parked on our street, right by our driveway, backed right into the car. So he's very nice, though. Sends us, all his insurance information, so it'll all get taken care of. But, hey, it starts off. We get onto the airplane. We get to Utah. Everything's going well. We get there. Blizzard.
Yeah.
And I mean, it is dumping snow. So the first day we can't even ski. The kids go out and ski. I can't ski in that. I mean, just, it was like 2 degrees. You can't even see like 5 feet ahead of you. The kids are like, screw this, we're going. And so they went up and skied. But, I'm not doing that at my age. So everything's great. Rest of the whole thing went great. Dwayne came over, my liberal cousin Dwayne. Yeah. We had long talks about economy and politics, of course, and what's happening with capitalism versus socialism and all these type of things.
Did you convince him?
No. He is the perfect person to have a conversation with because he has his point of view, right, that he thinks. but he's very open to hearing other points of view. And of course, I talk about things very factually, just, this is statistics, this is economics, this is how this works. So we always have really good conversations about this, but he's a big fan of the show, right? And so we talk about him a lot. And he gave me a Christmas present.
Oh, did he?
He did. And you will now have a new bobblehead of my liberal cousin Dwayne that he had made.
That's great.
That will now be residing in our studio. So Dwayne, thank you so much for the bobblehead. You will now be a permanent resident of the Real Investment Show.
Oh, that's
here.
great.
I don't know where our bull and bear went, but
Well, we'll put it up here on the set.
there you go. So anyway, flight back though, we did get delayed 5 hours.
Only 5 hours.
Only 5 hours at the airport. No, it was interesting though. We did get into the airport at Salt Lake, so we're coming back, and we go into the airport. And as you walk past one of the baggage claim areas, it's one of the Southwest lines. There is literally had to be thousands of stranded bags sitting in Salt Lake City, just waiting to get somewhere, I guess. But
is Salt Lake City a hub for Southwest?
I don't know.
I don't know.
But there was a lot of bags just sitting around that all belonged to Southwest. So, but we got delayed 5 hours on the way back, but finally got home and everything was good. So,
I'd say it seems like a pretty calm trip for the Roberts household, all things considered.
All things considered, wrecked car, delayed flights. Other than that, it was awesome. And blizzard. Don't forget the blizzard. So,
And we're not talking Dairy Queen either.
And by the way, when after we left, we actually left just in time because Dwayne actually called us. He says, you left just in time. They got 3 feet of snow over the next 2 days.
Really?
Yeah, it's just a huge blizzard. So
That's no way to live.
Yeah.
That's no place to live.
Anyway, Danny, good morning. How are you?
Hey, good morning. Doing great.
Good. Awesome. Danny Ratliff joining me this morning. So, a few things here, kicking off the new year. We talked a lot, at the end of last year about doing tax loss harvesting and doing donor advised funds and getting all that stuff in, before the end of the year, because there's certain deadlines that you have to get done before December 31st. Now that we're past that, you can still make your IRA contributions until April the 15th. And so you still have time on some of those things. But this is now that we're into a new year, right? It's now time to start thinking about, okay, what do we do for the next 12 months, right? And this is, as I was talking about a second ago, in kind of the open, is that, there's a lot of concern right now about where the markets are going to be this year. And of course, what's going to happen economically. But there's also the political side of the debate that is going to be really kind of focused on this year. Potential for higher taxes, potential for changes to tax law, those type of things. So, these are some of the things that, we're going to have to think about, and again, we don't know, as is always the case, what might pass or what won't pass, right? So again, now with the split Congress between the House and the Senate, that's certainly going to make it more difficult to pass tax law changes or pass, other types of bills, but it's always an annual concern, right? So when we start talking about, the political side of what could happen, how does that feed into, Roth IRA conversions? Should you consider that, early distributions from retirement accounts, those type of things? So, Danny, what are y'all kind of looking at, potentially this year that people need to be thinking about?
Yeah, we are hoping that 2023 is going to be a much quieter year on the legislation front, in the sense that, and really this last year was rather quiet compared to 2021, because lots of changes were trying to be pushed through. So with there being a split, I think that's going to be advantageous to us for the moment, where we don't feel like, our pants aren't on fire to go make a big change quickly. However, I do think you need to be very mindful as far as where you're putting funds, understanding that things can change and can change quickly. And our thought is that they're still going to see higher taxes at some point. Did you see the new spending bill?
Right.
It's not like they're taking things away.
1.7 trillion.
Correct. Yeah. So the thought is that at some point you're going to see these higher taxes. So we're talking about a lot of hypotheticals, though. What does that actually mean? What does that mean for you? Do you retire in a much lower tax bracket? And what we find is that many times most people don't. And so where can you put funds aside right now? And so you mentioned the Roth. I think that's a great avenue, especially for the moment. I don't believe they're going to go away. The government needs money and they need it now. So they would rather, instead, I think, giving you that, before tax, you putting funds away pre-tax treatment, I think they'd rather get to the assets now and be able to tax those funds at the moment. But further down the road, I do envision it seeing taxes are going to be higher. So like you mentioned, Lance, I mean, these are things that we always talk about frequently, is that where can you put funds now? So a lot of times we do hear from people, they say, listen, I am 62, I'm going to retire at 65. I don't need a financial plan yet. And, my thought is the younger you are, probably the sooner that I think that we can really help a lot of people, because by the time you get to where you're stepping into retirement, I'd like to be able to help somebody prior to that say, hey, here's where you should put funds, versus just saying, well, everything's right here. Here's where we're going to pull it from. Because what we're looking to do is keep more money in your pocket longer term. And I think it's pretty difficult if all we do is stuff funds in a 401k or those pre-tax accounts, which unfortunately, that's what we've been told for years. I think everybody's brainwashed. The industry's brainwashed and saying, you put funds in these pre-tax accounts and it's great. It makes sense until you start thinking about, if you have that partnership with Uncle Sam, you start taking funds out and they begin to tax you on it, and it's going to be at a higher rate than what you envision. Your funds just don't go as far. And so I think that's why we need to start thinking about where you're putting funds right now. And going into the new year, everybody needs to be looking at, what do your 401k contributions look like? Are you putting those pre-tax? Are you putting them after tax? Are you leaving money on the table? I mean, we talk to a lot of people that they fully fund the 401k, and they do so very quickly, but because of the way they do so, they're actually leaving matching funds from the employer on the table because they're not doing so over the full year. So lots of things to think about. Start diving into your 401k, your savings plans, understanding where you're putting funds, and make sure you're doing so in a way that you're taking advantage of everything that your employer has to offer. And I think that's another big thing right now, Lance, is that going into the new year, taking a deep dive into that is something that, I think a lot of people do a pretty good job initially, but we see a lot of times, at the end of the year, we're doing reviews saying, hey, how do we do? Yeah. That's one thing that we fail to account for a lot of times.
Well, and it's interesting, too, because you mentioned the $1.7 trillion spending bill. That thing was loaded with all kinds of new taxes that are coming out. And if you don't think your taxes are going up, you're sadly mistaken. Unfortunately, what the government hopes is that you'll just think it's just on the greedy, evil corporations, right? Because there's just additional taxes on oil and gas corporations, additional taxes on coal, the production, taxes on stock buybacks. There's a 1% excise tax on stock buybacks. So it looks like, it's just we're raising taxes on those corporations. Don't worry about it. Just remember that everything rolls downhill eventually. And so just because the taxes are going up on these corporate side, your taxes are going up as well, because it'll either come through in the form of higher prices or additional, tax inputs, elsewhere down the line. So again, it's just, the government just kind of hopes that this will all kind of bypass you and you just won't pay much attention to it. But, again, you can't impact the economy on one side of the ledger without it eventually winding up in the household at some point. So, these tax increases are coming down the pipe to you.
I'm not even sure they think that far out. I mean, I'm to be honest, they just think, hey, we need the money.
Yeah. Well, when you're spending $1.7 trillion in a year, and again, look, we're not, that $1.7 trillion they just passed isn't going to make it the full year. We'll run out of money before we get there, and we'll be back to another debt ceiling.
September.
Before October, that, yeah. Right? Because October's the fiscal year end. We'll run out probably May. We'll blow through this and have to raise the debt ceiling again. So just, there is no spending controls in Washington. Not when you don't have a budget to follow. Anyway, all right, be right back after the break. And we'll see what, kind of the outlook is for this year. And again, kind of talking about what are kind of the big challenges ahead. Don't go away. More of the Real Investment Show coming back with Danny Ratliff right after the break.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
Are you as worried about estate taxes as we are? Our first Lunch and Learn of the new year will focus on family limited partnerships. This valuable tool in the tax code could provide your estate with the safety and security you crave for your family. Join Richard Rosso, Danny Ratliff, and special guest Chris Masters, CPA with Doran Mayhew, Thursday, January 12th at noon, with the ins and outs of family limited partnerships for your estate and tax planning. Register now at realinvestmentadvice.com. Realinvestmentadvice.com.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement, realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
My wife's traveling. She's in Quebec right now for work. She called me up. She goes, everybody speaks French up here. I go, yes, honey. They're a French colony. She goes, I never knew that.
The Real Investment Show podcast. Same show, your schedule.
So the company that she's with took her out to dinner last night. They go to this very nice French restaurant. The appetizer comes out, which is bagua. She goes, that's duck liver, isn't it? Yeah, the rest of the dinner was downhill right from there. So
at realinvestmentadvice.com.
And the only thing that made it better was when they brought the snails out.
The Real Investment Show YouTube channel has all our videos ready for your easy access. Now with the new and improved Before the Bell reports, Candid Coffee, and Lunch and Learn replays, plus each day's radio shows like Technically Speaking Tuesday, Financial Fitness Friday, and the latest analysis from Lance Roberts and Michael Leibowitz. Subscribe and bookmark our YouTube channel for The Real Investment Show, or just click on the show links at realinvestmentadvice.com. Realinvestmentadvice.com.
Real Investment Show podcasts are now available from Stitcher Smart Radio at Stitcher.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets, and unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA Advisors to work for you managing your 401k plan. It's a quick and easy application. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
Our first Lunch and Learn of the new year will focus on family limited partnership. This valuable tool in the tax code could provide your estate with the safety and security you crave for your family. Join Richard Rosso, Danny Ratliff, and special guest Chris Masters, CPA with Doran Mayhew, Thursday, January 12th at noon. Register now at realinvestmentadvice.com.
You're listening to The Real Investment Show.
So, one of the big challenges in my household is my wife trying to reach things because she's short. So, it's like just to irritate her, I put things on higher shelves that she can't see.
Where did that go? It's right here, honey.
Look up there. It's right there. But the other day she's trying to. So we have these cabinets. We have this in this house that we rent. We have the people built these cabinets, and they have sliding drawers in them to store, like it's like a pantry, right? So we have like a shelf. Like one of the drawers has all the soup in it. And the other day she's not feeling well today, so she was trying to find some chicken noodle soup. And she's opening this drawer, and I hear this clunk, 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 clunk. Oh. And she's in there having to lift each can out. And she's standing on tiptoes as she's trying to reach the back to get these cans out so she can see what the soup is. So anyway, it's a daily challenge for her struggle to be short, right? And so I just wanted to let you know that I'm doing my part for the climate by, being married to a short woman.
Did you see that there's a new study that said that
a
being
New York
short,
Times op-ed?
Yes.
It's not a study. It's an op-ed.
Oh, there you go.
Okay,
short story.
So it's a short story. She says,
written by a short person.
Maura Altman claims that we need to mate with short people because if we can lower the height, the future generations, we won't eat as much. So it'll save the climate.
Somebody thought real hard about that one.
So
What editor even let that pass? You know?
it has to do with climate change. So you there you go. It gets a pass,
Yeah,
right?
I got it.
So it doesn't matter. There's no scientific, because again, there are two short people can mate and have a tall person.
That's right. Yeah.
Because of what happens in genes. There's a show on television my wife watches on TLC called I can't think of the name of it, but it's
Vertically challenged?
well, it's little people.
Little people.
Little people.
Yes.
And anyway, so it's about this family of little people, but they have normal sized children
Yes.
from time to time.
Yes.
So it has what to do with your genes. It's not just being with somebody short.
I once read somewhere that short people have a higher rate of metabolism, which means they would eat more.
Possibly.
So there you go.
So anyway, I just want to let y'all know I am doing my part, though.
Thank you for that.
I'm trying to save the planet.
You were cool before that was cool.
I know, right? And of course, all of our kids are taller than she is, like by multiple inches.
Yes.
So,
Yes.
Again, just a proof in the pudding.
How tall is your bride?
5. Well, it depends on you ask her.
Oh,
and
yeah.
whether or not
And
you're
the shoes she's
including
wearing.
And what
the
shoes.
shoes and
Yeah.
the hair,
Yes.
right?
Yeah,
So 5'5" on a good day, but reality probably 5'3.5", 5'4".
Okay.
So
All right.
yeah,
She seems taller.
because usually it's
She's-
heels and hair.
She's somewhat statuesque.
Heels and hair do the trick. Do
Yeah,
the trick. Yeah.
yeah.
So anyway,
Big hair.
exactly. Higher hair.
Oh, man.
So Danny, good morning.
Morning. Welcome back, Danny.
Anyway, do your part, people. Save the world. Anyway, so Danny, a couple of things. As we're kind of starting to get into the year-end reviews, starting to talk about what's coming up this year, financial planning, adjustments to inflation, adjustments to economic growth. Those are all kind of be the big talking points, here to start the year. The question, of course, is, really this comes down, as I said earlier, this all comes down to the Fed. Ultimately, is the Fed going to cut rates at some point this year? Are they going to pivot? Are they going to reverse QT? Because those are the real drivers of the markets over the last, few years. Monetary liquidity infusions, both government as well as Fed, have been big drivers for asset prices. Those are all in reverse right now. So again, it's a bit challenging to expect, 6, 8, 9, 12% rates of return in a market where you have the headwinds that we have now versus the tailwinds that we had previously. So
Yeah, I think it's like you said in the first segment, nothing has materially changed since we, moved into the new year in 2023. We're still dealing with the same problems that we faced earlier. And so one thing that we're really looking at and doing a deep dive into in the beginning of this year is what does spending look like last year? Because many households are finding that they actually spent more than they anticipated because of inflation. Mm-hmm. And then there's some that just spend more because they spend more, right? They just do what they do. And so many times when we look at a plan, we say, okay, how are we doing on our end of the bargain? Are we holding up with investment returns? Are we, in a bad year, were we able to mitigate some risk and do a little bit better than what we had expected or anticipated within the plan? What are we doing for those inflation numbers? And we want to make sure that on both sides of the ledger, okay, we're gonna have years that we don't perform as well as we hope. I mean, that's going to happen. These are markets, right? If it's not a fixed investment, it's something that's going to go up and down. And so, but we can work hard to mitigate risk, reduce exposure, increase it at different times. And but we need to make sure that we're holding up our end of the bargain on the other end, which is the spending. And so this is the part that I think most people don't like, Lance, because nobody wants to be told how much they can spend.
that 4-letter word, the budget.
Correct. Yeah. But within a financial plan, my goal is for you to say, Danny, here's what I would like to do. Here's my goals, my needs, my wants, my wishes, my dreams. This, the biggest pipe dream. I want to try to help make sure our clients can get there. Is there a way that we can find that you can accomplish these goals? And if not, okay, well, what do we need to do? Is there something different we can change along the way? And so this is a time right now, I think that a lot of people, we get into the new year, everybody wants to lose weight, save more money, and make more money. And so all great things. But we need to start and take baby steps by doing so. And so that 4-letter word that I don't even want to say, budget, this is a really good time to start taking a look into what you actually spent this last year And, we're going to have things that occur that pop up that we just can't account for. But there's going to be things that we can control. And so that's what I want you to really look at and say, okay, what did I spend this last year? Are these, items that I'm going to continuously spend on? Or was it a one-time deal and likely, the AC goes out, the car breaks down? I mean, these are things that just aren't likely going to happen, or events that won't happen each and every year. So go look at what that budget looks like, and then go back to your advisor and say, okay, you know what did we have in the plan? All right, we had X amount. I spent less. Great. Or I spent way more. Can we adjust that? And I think that's one of the problems with a lot of plans, because many people, they get this plan. It's just paper bound. It looks pretty. They stick it in a drawer. They never do anything with it. And I hate it. My clients will tell you, I don't like sending out paper plans because, unfortunately, it's just kind of a paperweight at the end of the day. And so I want to be more interactive with it, because life happens. We're going to get curveballs, forks in the road. We need to adjust.
Well, and the most important point about that is, and this is something that, a lot of people will tell me, they go, oh, I've already got a financial plan. I was like, great. When was the last time you updated that plan? Oh, like 6 years ago. So what happens is most times they go meet with an advisor and they get this nice, pretty bound plan, right? And then it goes on a shelf, and then nobody ever looks at it again. And then you're just kind of off to the races to whatever happens, and markets are going up and down. And this is why, really it's so important. You have to update. That plan is basically the blueprint for building your house. And the problem is that every year you've got to update that plan for changes to the code, right? Whatever happens in the markets, you've got to update that plan so that you can know whether or not it's the guidepost of whether or not you're on track to meet your retirement. So if you're not updating that plan every single year, it really isn't worth doing the plan to start with, because once you've done the plan and then you put it in the shelf, it has no value after that. The whole value of that is that is your pathway to success. And every year you need to, and this is I've talked about this before. This is one of the biggest fallacies of the market. Every day you're watching CNBC and everybody says, well, if you didn't beat the S&P last year, who cares? The S&P has nothing to do with your portfolio or your lifestyle or anything else. The S&P doesn't pay taxes. It doesn't have, net inflows of capital like you can put into your account. It's just basically a stagnant picture of stocks. And what you don't get the benefit of that an index does is what's called the substitution effect. If a company goes bankrupt, they just take it out of the index and put a new company in. It all readjusts. And it's all based on market cap. It has nothing to do with what happens in your portfolio, right? And so it has no cash. You've got cash. So you've got to manage your cash exposure. And all these things, they all have an impact on your returns over time. The only thing you should benchmark to is your financial plan, right? Your financial plan says you need 5% a year. Did you make your 5% last year? Yes or no? That's all you need to know about getting to your retirement plan. Forget the S&P. All the S&P does is make you take on too much risk. It leads you to make bad decisions because you're worried about the volatility up and down. Go back to that plan. Am I on track to meet my plan? That's all you need to be focusing on.
Well, that's what we need to talk about, right? The hurdle rate. What is that hurdle rate that you need to accomplish those goals? And does that mean that each and every year you're going to meet that minimum rate? No. But over long periods of time, you should be successful. And the other aspect of that, we talk to people day in and day out that say, oh yeah, don't worry about the plan. Okay, how long since you've updated? Oh, 8 years. Well, do you think anything has changed in that 8-year time frame? Do you think we've had inflation adjustments? For not only income tax brackets, but for how much you can put aside in 401ks and IRAs, inflation adjustments just in general. I mean, come on, the Fed had a hard time getting inflation above 2% for over a decade. And I mean, look what had to happen just to get us there. And now, granted, it may stick here for a little bit longer than everybody's hoped, but has your plan been adjusted for that? What about for bad markets? Do you ever assume for that? Well, just the little things that we need to, the reasons why we don't just put them on a shelf, because they need to be adjusted each and every year. We're adjusting capital market assumptions. All of those things need to be taken into account.
Yeah, and it's interesting, every year at this time of the year, I kind of run through a budget, as you said before, like, did I spend more than this year? This year I was really excited because, we sold our house, we're renting. Yep. I brought costs down. Did I save any money? No. Why? Inflation. Yeah. I looked at our food costs went through the roof.
Ours did too. I think it's almost getting cheaper to eat out than it is to eat in. It's crazy.
Got to be careful where you go, though.
Yeah, no, you do.
Went to a restaurant in Salt Lake. Crazy.
Yeah.
Crazy what they're charging for food. So anyway, be right back after the break. Don't go away.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Are you as worried about estate taxes as we are? Our first Lunch and Learn of the new year will focus on family limited partnerships. This valuable tool in the tax code could provide your estate with the safety and security you crave for your family. Join Richard Rosso, Danny Ratliff, and special guest Chris Masters, CPA with Doran Mayhew, Thursday, January 12th at noon, with the ins and outs of family limited partnerships for your estate and tax planning. Register now at realinvestmentadvice.com. realinvestmentadvice.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets, and unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Get started right now at the website, realinvestmentadvice.com, or simply call our toll-free number, 855-RIA-PLAN at realinvestmentadvice.com.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement, realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
The Real Investment Show.
And welcome back to the show this morning. Danny Ratliff joining me. So, Danny, you got a Lunch and Learn coming up here shortly?
We do. It's going to be on family limited partnerships to talk a little bit about estate planning, what families can do to protect themselves. So, have Chris Masters, partner at Doran Mayhew, so an accounting firm here in Houston. Really, just a lot of great information just to make sure that, you know, it's one thing I think that is so overlooked, and we talk about this often, the estate plan. Nobody wants to address their mortality or address where those funds will go when they pass. And, you know, how do you protect them in the interim? And so this is one of those deals we hope at the beginning of the year, maybe everybody's kind of thinking about, okay, what should we be doing to just kind of, you know, dot our I's, cross our T's. And so this will be a good one.
Yep.
It'll be the 12th. This is going to be next Thursday at noon.
Well, again, you know, we talk a lot about this, you know, it's, and, you know, part of you know, there's two aspects to creating financial stability in life, and one is building the assets, and the other is keeping them, right? And so, you know, we have a lot of clients that come to us, and they're like, "Yeah, I've got 14 rental properties, right?" And it's like, "Okay, well, who owns them?" I do. It's a terrible idea. So, you know, if you want to lose assets really quickly, you know, don't structure your financial nest egg in a manner to protect those assets. You know, there's a reason that rich people don't own anything directly. Everything is through a holding company, which owns other holding companies, which owns other LLCs, that distance those assets from personal liability. So again, if you own multiple, as a good example, you have multiple rent properties. Every one of those properties should be in a separate LLC. Why? Because if somebody falls, off the front step and breaks their leg, they're going to sue. And the only person they can sue is that LLC, because that provides the asset protection between that house and you personally, so they can't get into your personal assets. They also can't go after all the other rental houses that you own. So it limits that liability to that one house. And so this is why family limited partnerships, these types of things that we talk about whole life insurance, we talk about all these other things that are part of that overall estate planning process that will not only help you build wealth, but will help you maintain that wealth over time, because things happen, right?
Yeah, they do.
Certain.
Well, this is kind of that next step, right? So we hear a lot of people say, well, Dave Ramsey says this or that. And Dave Ramsey's really good for people when you're trying to get out of debt and you're trying to just get to saving. But what do you do once you've accomplished all that and now you have funds and you need to protect them? And so that's what we're going to be talking about. And so to make sure that, like Lance said, somebody falls down on a rental property, right? Everybody has rental property now. Mm-hmm. What happens? I mean, that's a big key. What happens if you get in a car wreck? I mean, these are things that people don't think about. Right. You don't have an umbrella policy. Well, okay, well, where are they going? They're going to start looking at assets. What do those attorneys do right away? Say, well, okay, where does this guy have this? Okay, we're going to go after this.
Right. Yeah. And
how do you protect it?
Yeah. And because insurance policies, have auto insurance. Yeah, but there's limits to that coverage.
Correct.
Right? They don't cover everything. And so lawyers, if you get into a bad auto accident, they're going to start going after your personal assets. Well, if those things are shielded, they can't get to those. Things like, and again, Dave Ramsey, awesome guy for getting yourself out of debt. He poo-poos whole life insurance policies, but those are judgment proof. Those are assets you can build in cash that provide an annual stream of income and a whole lot of other, potential benefits, but they're judgment proof against, lawsuits and liability. Annuities. A lot of people poo-poo annuities. They're like, oh, well, annuities are too expensive. Yeah, that's true, right? You've got to be careful. And annuities should not be sold. They should have a part and parcel within your portfolio allocation and within your estate plan. But there was a reason that when Enron collapsed, Ken Lay's family maintained much of their wealth because he had transferred most of his assets into annuities, which are what?
Credit proof.
Credit proof. Right. So there are reasons to own certain things to protect your assets and protect your liability. So again, don't just throw things. And a lot of people I talk to, they're like immediately as soon as you bring up something like whole life insurance or annuities, I'm not interested in that. I just want to own a bunch of stocks. That's great. Now you've got market risk, you've got liability risk, you've got all these other risks that you're not counting on. It's not just the market going up and down. It's all the other potential things that can happen that can take a large chunk of your wealth away from you.
Yeah, that's a really good point. So the idea is that if you can take a big picture look, we talk about holistically, understanding where you're putting funds, how are you protected if something, have a bad event occurs. And that's so important as far as keeping that wealth. Mm-hmm. That's a big part of what we talk about on a regular basis. Do we have everything in one bucket? Should we be looking in other areas? And so granted, we do that within portfolios, right? We look at market risk and how correlated are we to markets, but you also need to start thinking about, especially if you're in accumulation mode or even protection mode, how are you doing that right now?
That's
and
right.
Many people don't have a plan.
That's right. So anyway, when is that seminar?
That's going to be the 12th, right, Brett? Yeah.
It's a Thursday, right?
Thursday the
12th.
Not this Thursday. Next
right.
Thursday. Yeah.
Next Thursday the 12th. And it's online, so simply go to our website, realinvestmentadvice.com. If you're interested, just click the link to register for it, and we'll send you all the relevant information to log into it. But that'll be on the 12th.
Correct.
All right, get ready to wrap up the show this morning. Futures are pointing a little bit higher. Interestingly enough, rates are coming down, yields coming down here. Of course, this is ahead of the Fed minutes. So the Fed minutes are going to get released, and we'll kind of get a window glimpse into what was supposedly talked about. Now, look, these minutes are all tailored, right? So these aren't actual minutes. These are the tailored minutes from the meeting to portray the message the Fed wants you to hear. But those minutes will get released. People will kind of start analyzing those. And, of course, the Fed's going to continue to hike rates. Estimates right now are that the Fed will hike rates 3 more times in this year, 25 basis points each at those rate hikes. So that'll get us to about 5.25% when we get there. And then the plan for the Fed, and this is what will probably be in the minutes, is that the plan is to get to 5.25, and then hold those rates there, right? And it's just not hike anymore. That's not a pivot, by the way. That's just getting them to a point and terminating rate hikes. Now, interestingly enough, yields on treasuries tend to peak before the peak in Fed rates. So again, interest rates on the 10-year treasury have stopped going up. Now, they've been kind of vacillating back and forth over the last couple of weeks, but they're not going higher. They're just kind of going up, coming down, going up, coming down.
down a little bit more this morning. Futures are up about 8 points right now. Now, futures were up a lot more this morning earlier. They're starting to fade as we get closer to the open. So hopefully we'll see how the market goes. Again, we talked about at the open of the show this morning, the first 5 days of January tend to kind of set the tone for the month of January. So goes the first 5 days, so go the month. And then, of course, January tends to set the tone for the year. So goes January, so goes the year. So, again, everybody's kind of watching this first 5 days. Santa Claus didn't come to visit over the last, week of December. That was disappointing. Markets didn't perform well, but they didn't perform terrible either. As I said this morning, we've just really been going sideways now for about 2 weeks. Have not really done much in the markets at all. So, again, didn't get that rally that everybody was kind of hoping for. But again, this first 5 days of January, this is where we have a majority of inflows coming in, 401k contributions, pension contributions, those type of things. There's a lot of money being dumped into the markets, and you should get a rally here, at least in the first couple of days of January. We'll see what happens. But watch yields. Yields tend to peak before the Fed stops hiking rates, and then yields tend to fall over the next 6 and 12 months after the Fed terminates their rate hikes. Yields tend to fall. The reason why is because we're in recession. So again, the big call for this year is recession, no recession, and the impact it has on economic growth, earnings, and of course the markets. This is all eyes are on the recession at this point.
Yeah, you got to love all the headlines right now. I saw one today that said slow session.
Yeah.
So it just means it's going to be real slow for a while. But it's not going to technically be negative, which I don't know what, it's all about the same at this point, right?
Yeah. I'm not sure there's a difference between a slow session, a recession, or just a deep dive. I mean, it eventually to the point of the consumer, it's going to feel bad. And, right now the hope is that somehow we're going to go through this economic slowdown and not have a dramatic uptick in unemployment. But usually that's not the case.
Well, and we're beginning to see, just like we talked about last year, we thought that we'd get into the new year, see more layoffs. We're seeing that today. I think we're probably going to continue to see a little bit more. I'm actually hearing from people that we know that, hey, just got laid off beginning of the year. Anybody else know somebody? It's an unfortunate part of times like this, but probably something we may see more of that to come.
So be sure and get by the website if you have any questions. Michael Leibowitz has a new article out this morning talking about the kind of the pathways of what's happening with the Federal Reserve. And again, this is all about QT. So as we go into this year, and if you're expecting a big rally in the markets this year, it's possible, certainly. But one of the big challenges that we're going to have is the fact that the Fed is extracting liquidity out of the markets through both rate hikes as well as quantitative tightening, and that has been a big driver of the markets over the last 10 years. It's going to be the question of can markets exist without the Fed doing this? In other words, can markets climb even in the face of the Fed reducing their balance sheet and tightening monetary policy? Typically, that's never happened before in history. Generally, when the Fed's hiking rates, markets don't tend to perform well. But could this time be different? Sure. We always have to leave room for the possibility of something. But from a probability standpoint, we're continuing to remain a little bit more risk averse right now as we do that. So get by the website. In fact, we talk more about QT in this morning's daily commentary. So make sure you're subscribed to the website that goes out right at 7:30, gives you a market trading update for the day, gives you commentary, quick 3-minute read for you, kind of get you up to speed for the markets, what's going to happen during the day. We update that every single day through the week. So make sure you're subscribed to the website, realinvestmentadvice.com. Send your questions, comments, emails. If you need help, need to talk to Danny about your financial planning, estate planning, etc., he's happy to help you. Simply go by the website, click the Ask a Question link at the top of the page. Send us your questions, comments, emails. Always love to do it. realinvestmentadvice.com. Have a great day. We'll see you back here tomorrow for the Thursday edition. Michael Leibowitz will be here tomorrow on Real Investment Show.